Good morning, ladies and gentlemen. Welcome to this AHDB United Oilseeds conference, focusing on oilseed rape this morning. My name is Martin Grantley-Smith. I am the director in AHDB responsible for cereals on oilseeds, and I will chair this meeting this morning. Before I go into some of the housekeeping details, let me just say that despite everything that's going on with oilseed rape production at the moment and all the problems that it faces, we in AHDB continue to believe that it has an important place in crop rotation in the future, and that we remain firmly committed as an organisation to improving the product and its production. And for those of you who are particularly interested, we have recently updated all our plans on oilseed rape activity in AHDB. And part of this commitment is to continue bringing to you new information to both growers and advisors. And this is really the purpose of this webinar. We can't hope to cover everything in the webinar, but we will give you some pointers as to what information is available. And I would refer you to our website. And I'll refer to that at the end as well. So I'm pleased to be able to bring this webinar to you in conjunction with United Oilseeds, our partner in this work. We've been able to do this for a number of years, although this is the first time this is a webinar, so we will see how it goes. We've got three excellent speakers this morning. Owen Cligg from United Oilseeds, I'm sure many of you know, Mark Topliff from AHDB, and Sarah Kendall from ADAS. So just to go on to a quick bit of housekeeping, if I can have the next slide, please. You'll be muted throughout the webinar. The webinar is due to finish at 12:30, so do ensure if you're on laptops that you've got power plugged in and you've got a main source. There'll be formal question period at the end. So feel free to ask questions whenever you like, but they will come up and we'll discuss them at the end. You can ask questions by opening the questions panel, which is on the right-hand side of your screen, and put your questions in, and I have a colleague, Judith, who will be watching them as they come through, and then we will address them at the end. This webinar is being recorded and published on YouTube and the AHDB website, so you can revisit it if you miss any of the content. And there will be a survey at the end, which you'll be prompted to answer if you wouldn't mind, because it's just our way of improving future events. So can I then move straight on to our first speaker, Owen Cligg? He should need no introduction, as I know many of you will know him very well. So over to you, Owen.
Good morning, everybody. Yes, I'm Owen Cligg of United Oilseeds, the trading manager. I've been there for 11 years now. I wanted to talk to you today about the impact of EU exit pricing and all market opportunities. If we could have the next slide, please. So the good news is that with the leaving of the EU at the end of last year, we embarked on a free trade deal. So although there are likely to be no tariffs on oilseed rape, it also means there are no tariffs on rapeseed oil, which is very good for the UK. And biodiesel policy remains unchanged till 2022 and is likely to remain unchanged going forward to the EU directive that's going to be coming through for RED II. Commodity markets remain strong, and funds are also looking to own commodities, so we're really in a bit of a bull market at the moment. If we have a next slide, please. So if we just look at what's happening in the background with soya, you can see with the following graphs, we've got 2019 to 20 and 2020 to 22, the last two sets of columns. We can see that although production has been rising over the last year, disappearance in red has been going at a higher rate. So the stocks have been reducing, and that's been part of the reason why we've seen prices go up. But if we look at the next slide, please. So we can see the soya price on the March 2021 contract. I did this on Monday. It was 13.78. Then it sort of spiked up during the week over well over $14. It's just back to about 13.90 at the moment. But we're in a very sort of strong period on soybean prices that have been rising since November, December time. China has been buying an awful lot of soybeans and replenishing their stocks, and the South American harvest, although the yields aren't necessarily too bad, it's been a delayed harvest, and there are lots of boats waiting to collect soybeans to go to China, and the market's become very tight. Next slide, please. So in conjunction with soya, the corn market is also very bullish at the moment. From December as well, we've seen a big rise from $4.20 a bushel up to $5.50, and you know, that's sort of also due to Chinese buying. And although there were supposedly plentiful supplies of corn around, they've been diminishing. And we've got this phase now going through into the spring in America, whereby there's going to be a competition between corn and soybean acres that will keep the market fairly steady. We think that the last USDA figures showed that corn acres were liable to increase from 90 million acres to 92 million acres, and soybean acres from 83 to 90 million acres. Even if we have all those increase in acres, the projection is that due to increased demand, we're still going to have tight stocks. So that's why people are generally thinking that the markets remain steady and we've got fund buying participation. Next slide, please. So if we just look at the world supply of rapeseed and canola, the purple line at the end of each bar chart, that's actually slightly gone up from 1920 to 2021. That's due to an increase in production in Australia. They've gone from sort of about 3 million tonnes up to nearly 4 million tonnes, but the EU is down to 17 million tonnes in the current year, and Canada's was at best steady. So if we have a next slide, please. And we look at what's happened to the oilseed rape price on the May Matif future in euros. So if we look at this was again on Monday, we're up to 460. The market continued to rise during the week as there were some interesting developments on the Winnipeg market. They went to all-time highs at about 840 Canadian dollars. That market since retreated, but the Matif has peaked at about 493 euros yesterday morning. It's about 484 euros as we speak. So that's put UK rapeseed prices at well over £400 a tonne, and even 400 available in Scotland. So those are, you know, highs that we haven't seen since about 2012, 2013. Next slide, please. The other thing that we've got to watch at the moment is the sterling euro rate. Sterling has been relatively strong. We've got a situation whereby we're peaking at about 1.16 against the euro. Today we're down to 1.15. Yeah, if the market stays high on the currency, that takes away a little bit of our competitiveness and makes imports cheaper. So that's slightly bearish for the price, but part of that's maybe due to the Brexit deal and also the vaccine rollout. Whether it will continue remains to be seen. Next slide, please. So palm oil prices, they've also been very buoyant, going up to sort of 8-year highs. It did come off a little bit in January, but they're strong again now. I think it's a little bit higher than when I did this graph. So yeah, you can see that palm oil, which is the biggest vegetable oil that's been produced, has been in short supply, partly because of the problems with production, with getting labour due to coronavirus, and generally reasonable demand. Moving on, please, to the next slide. So if we look at the vegetable oil comparison between rape, sun, soya and palm, if starting on the left, The bottom line in blue is palm, again soya in green, sun oil in the purple, and rape oil in the red. So you can see rape oil started off back in June 20 as being the premium oil, but that's been taken over by sun oil, whilst palm oil and soy oil have stayed in conjunction. Interestingly enough, that rape oil has sort of lost its premium and is well under the sun oil at the moment. And we've actually been in a situation in Europe where we've actually been exporting rape oil to China, which has kept the rapeseed oil prices quite high, or kept rapeseed oil prices quite high. And although there's perhaps been a little bit of loss of demand on the biodiesel, that's been more than made up by the export of the rape oil to China. Moving on, please. So world and EU biodiesel production. Biodiesel is still very important. The blue line shows the million tonnes production of biodiesel. So looking at the world and the EU in 2020, we saw a little bit of a setback due to coronavirus and lockdown, but going into 2021, the idea is that we go higher again into record production, and also the EU staying fairly flat. So if we move on to the next slide, please. So how is EU biofuel policy going to develop, and how does that look to impact with the UK? So the UK is following the EU policy at the moment. Generally, there's a mandated level of biofuels, ethanol, bioethanol and biodiesel, around sort of 7%. It varies from country to country. From 2022, the 1st of January, there's going to be the Renewable Energy Directive 2 come in, and that's going to look to reduce the crop cap on the percentage of crop-based fuels. So going up to 2026, the idea is to reduce down to 3%, and that down up to 2032 down to 2%. So we're going to see sort of the mix of rape, palm and soy oil decrease. And then they're going to try and increase the use of tallow and used cooking oils. But the key to this is that RME, which is rape methyl ester, is very important in the mix, because that's got a low cold filtered plug-in point, and that means that it can be used at low winter temperatures, and it stops the filters waxing up. So I think in Scotland a few years ago there was a big uproar because a lot of the diesel started waxing in the filters and they couldn't use it. That's because they got the wrong amount and not enough RME in the mix, too much palm and soya, and that sort of causes that to be a problem. So RME is still going to be quite important, and we're also going to see palm and soy oil decreased anyway. There's already going to be potentially a ban in France, and also there's the likelihood of soy oil being reduced because of the issues of production of soya in the Amazon. Okay, so next slide, please. Looking at EU supply and demand of oilseed rape, we can see that the output, which is the red line, the output, which is the blue line, is the production, and that's sort of fairly, the last couple of years, around sort of 17 million tonnes. But we've got increased crushings, which is the red line now, up to about 23 million tonnes, and we require up to 6 million tonnes of imports. Now, if we move on to the next slide, please. We can see those imports, they're coming from mainly Canada earlier on when their harvest started up. So we had about 1 million tonnes of Canadian rapeseed coming to Europe. Also Ukraine, up to 2 million tonnes there. And then we've got Australian flows happening at the moment. The Canadian flow has stopped because, as I was saying, the Winnipeg market was very strong, and Canada was actually a premium to Europe, which is a bit of a dichotomy because Canada is the export area of rapeseed and Europe is the import area, but Europe's been catching up in price over the last week. And then we've got Australian rapeseed that needs to come to Europe, but the risk is that any Australian rapeseed goes to China, and that means that we've got a situation where, you know, Europe has to really sort of be on its mettle to make sure that it imports as much Australian rapeseed as it can. Next slide, please. So we're looking at the UK area and production change of rapeseed in 1,000 hectares and 1,000 tonnes. In 2020, you know, the production was the area, sorry, was about 360,000 hectares, and we had pretty horrible yields, below 3 tonnes a hectare. So we're crop size below 1 million tonnes. Going into 2021 harvest, the area is down to about 310 to 320,000 hectares, but at least the crop looks looks pretty good at the moment, and we're expecting average yields at least, so we should get back over the 1 million tonnes. We just go on to the next slide, please. So, summary of what's happening on harvest crop area, and looking at an optimistic projection going forward. So as I said, in the current year, we're 360,000 hectares, which we brought as a crop of just below 1 million tonnes. Going forward to next harvest, 2021 harvest, we're about 310,000 hectares, but we're hoping for a bounce back in area. If we can get up to 420,000 hectares and then 500,000 hectares in 2022, we can see in a couple of slides' time how that impacts. But next slide, please. So if we look at UK demand for the current year, this is a waterfall graph. So on the left, you can see in blue the various components of the demand throughout the country. So ADM ERIF would normally take up to 1 million tonnes of rapeseed. This year they're probably down to somewhere between 600 and 700,000 tonnes of rapeseed as a production figure, because they had a fire in June and they were out of production until November. So they're going full belt now, which is good. And then you've got Liverpool, which generally takes about 600,000. Hull takes 200,000. A bit of compound usage up to 150,000. Stratford, which is the new plant, yellow, will take hopefully 100,000. So we did start off with a reasonable amount of stocks, probably getting on for 100,000 tonnes of stocks this year, but that means we've got to import about sort of 400,000 tonnes of rapeseed this year, which is mainly turning up to Liverpool and ERIF from Ukraine and Australia. Next slide, please. So if we look at how all this impacts on where we are with harvested area, tonnes yielded, UK requirement and the shortfall, you can see at a bit of a projection going forward. So in the current harvest year, we need about 400,000 tonnes of rapeseed imports into the country, which is a yellow figure. Going into next year, because ADM ERIF will be hopefully crushing at full capacity again, 900 to 1,000 to 1 million tonnes, then we potentially require 800 million tonnes of imports, so that should keep the prices relatively firm. If we manage to increase the area up to 400,000 hectares, get production up to 1 million tonnes, the following year we still require 500,000 tonnes of imports, and if we can get up to 540,000 hectares, which has been a figure more used to rapeseed in the past, then we're still only at break even. So we're at what we call import and export parity, so that prices should still remain fairly firm. So next slide, please. So generally, looking at the bullish supply issues, we have got a UK rapeseed crop at a multi-year low, and struggling to go much higher for the next year. EU rapeseed crop was lower this year. They were hoping for a bit of a rebound next year. Soybeans have gone up on Chinese demand. Their hog herd has been increasing, so there's been a lot of demand there, and they've been there's generally low stocks in the world, and those stocks are being sort of moved into China. We've also seen the corn market rise, and you get this dynamic with the fight for acres between soya and corn moving forward. Next slide, please. So there are potentially a few bearish demand issues. There was lower biodiesel demand during lockdown, but we're hopefully coming out of lockdown that increases, and there has been a bit of an economic hit as people's wages have been reduced, as they've been on furlough, etc., and consuming buying power is that much lower. Next slide, please. So in conclusion, the home market for rapeseed demand remains good. EU rapeseed production should be up next harvest. US markets continue bullish momentum, and there should be a rebound in demand post coronavirus. And the next slide, please. So we've got a situation whereby we've got a winter, an estimated gross margin that we're doing for United Oilseeds that will be on our website that a colleague of mine has produced. We've got oilseed rate only marginally behind first feed wheat and milling wheat. So that's everything. Thank you very much.
Owen, thank you very much indeed for that. That was excellent. Thank you very much. Can I just remind you, if you have questions for Owen, to put them in the questions function, and we'll pick them up at the end. Now, we've had a lot of questions in about basis and Neroso points. Can I just refer you back to the documentation that you had to get into this webinar, and you'll find the information there. It requires you to email into AHDB. If you need more information, let us know, but it is in the documents that you received at the very beginning. Okay, let's move on then to our second presentation. It is Mark Topliff, Dr. Mark Topliff, who is in AHDB. Over to you, Mark.
Thanks, Martin, and hello, everybody. So during the next few minutes, I'm going to be using 4 years worth of data from our Farmbench benchmarking program to look at how oilseed rate margins compare to other crops, what the top 25% figures look like, and the range found within that group, and then uncover the main cost areas that should be considered when looking at cost efficiencies with your own oilseed rate crop. So firstly, looking at oilseed rape and how it compares financially to other crops, starting with a look at the sort of gross margins. This is looking at a range of crops, including main combinables, but also potatoes and sugar beet. And this is on a ton basis, so that we can compare, taking into account the yield levels of the crop shown. It also allows us to look at the figures in relation to the commodity prices, which of course is paid on a pound per ton basis. And we can see here that, you know, for both the top 25% and the middle 50% performing farms, ranked by their net margin performance, oilseed rape has the highest gross margins. And if we move on to looking at the figures for oilseed rape but by net margin, and this is taking into account the sort of fixed costs and overheads, then oilseed rape still compares very well and still remains in positive territory, unlike some of these sort of middle 50 performing crops that you can see, such as oat, wheat, and beans. So does this achieving this kind of margin mean that you need to have the lowest of all costs and the highest yield? Well, not really. So if we have a look at the sort of top 25% performance and using the 2020 figures in illustration in a clarity of a single season, we'll see that we've got a range of individual costs and different variables here. So yield, you can see the top 25% varied from 2.6 tonnes per hectare to 5.3. Area grown was quite significantly different as well, although most of those that sort of were in top 25% tend to be growing around about 50 to 70 hectares. So if we move on to look at the income and variable costs, you can see the income is the lowest, it's half that of the highest figure in the top 25%, and you can see that the total variable costs about a third of the highest, the lowest in that range. And so the overall margin is quite significant difference. So we're producing top 25% net margins, even with this range, and the overhead costs, you can see again quite a significant difference there. So the net margin ranged between £66 per hectare to quite a significant sort of 600 per hectare. So as you can see, a very sort of wide and significant difference there. So what I'll do next is sort of show a couple of actual oilseed rate enterprises just to help with relating to these figures. what I've pulled out here is two anonymised examples to paint a picture representing the range of production systems that achieved top 25% performance last year. Now you can see in terms of predominant soil type and rainfall, pretty much the same between these two farms, Farm A and B. Farm A grows about double the acreage of the other, and if I sort of show you what operations is carried out, you can see it carries out most of the operations itself. Also the number of treatment passes that Farm A carries out, and treatment passes in this sense is sort of sprays and fertilizers. They're very similar, just that Farm A producing one more treatment pass than Farm B. But in terms of nitrogen applied, Farm A applies over sort of 40 kilos per hectare less nitrogen per hectare. But if we look at what then the yield was produced on each of these farms, we'll see that Farm A produced a relatively low yield of 2.6 tonnes per hectare compared to Farm A 4.5 tonnes per hectare. So if we look at then sort of costs of seed and crop protection costs between these farms, you can see, probably understandably, considering the yields they receive, that the costs are very different between the two farms. Now, despite this has been two farms in very similar situations, getting similar amounts of treatment passes, you can see that the costs are much lower. So despite what seems to be a contrast between a lower output system with a higher input output system, surprisingly, if I move on to show the overheads, they're actually very similar, almost exactly the same, in fact. So so this is something which is maybe surprising, but it's something which we do see time and time again. And what we're trying to show here really is that even in similar situations, there can be more than one way to skin a cat. So the net margins there on a per hectare basis are not too dissimilar. A bit of a difference when it comes to pound per tonne, but the Farm A even produces a reasonable net margin return. So it's difficult to advise only one way that we can help growers obtain positive margins. There can be, like I said, more than one way to do this, and to a certain extent it depends on yield expectations. However, there are some sort of key cost areas that seem to make a difference and can be looked at no matter what your production system. So, but let's first have a look at yield and the sort of results that we've got from Farmbench and how that shows yield. So what we've shown here is along the bottom, yield tonnes per hectare. Alongside that, we've got the net margin results on a pound per hectare basis, and each of these dots represent an individual oilseed rape enterprise for the last 4 years. And you can see that the majority of those crops in the last 4 years were yielding over 3 tonnes per hectare. However, we have got a smattering of results which were between 2.5 and 3 tonnes, so lower yield but still producing a positive net margin. And Farm A was, from the previous slide, was from one of those groups that had the lower net margin, lower yield, sorry. So let's have a look at costs now and see what the main areas are to concentrate on. And really, when you look at the breakdown of total cost of production, and we proportion that, I've got here both the top 25% performers and the middle 50% performers based on their net margin. See here the breakdown of the cost, and the first one to look at is fertilizer. So fertilizer accounts for around 17 to 18% of total costs. So really, if you're looking at sort of areas to look at efficiencies, then whether you're getting the best price for your fertilizer. Can your fertilizer applications be more targeted or even be required at all? What does the crop and the season in front of you say? Many growers reduced fertilizer applications last year in that dry weather, as did not see get any or enough of the response for the cost involved of applying that fertiliser. So looking ahead to what the crop's saying and looking at whether it's worth spending that cost. The next area is crop protection costs, and these make up about 15 to 16% of total costs. And advice here is really very similar to fertiliser expenditure, really. Thirdly, total labour costs, and total labour costs here are about 11% total costs, and here including both the actual paid labour and also a value for the unpaid labour. That's combined in this figure. Labour can be a complex issue, depending on the sort of mix of employed workers to family members, and also what else is going on with the farm and its structure. Good labour can be hard to find and can be more costly, although ultimately they can also save you money. Of course, the next big area to look at, well, machinery, equipment, and here it's 21% of total costs. And in this cost we include repairs, fuel, contracting and hire charges, as well as machinery and equipment depreciation. As with labour, this can be a complex area to tackle, but as a starting point, I would sort of question yourself on whether you have the optimum machinery cost for the cost structure that you're aiming for with your oilseed rape and your other enterprises. For oilseed rape, I would aim for £220 per hectare total machinery equipment costs within a total cost of around about £1,000 per hectare. Also, when looking at your machinery costs, investigate whether your investment strategy is really working in your favour. I had one example which I came across towards the end of last year, where recently there was a grower looking to replace their self-propelled sprayer. Decided rather than replacing like with like, instead they purchased a cheaper trail sprayer to better utilise an existing tractor. And then the fifth cost in this wheel is rental value and rent. And taking actual paid rent and a rental value of owned land together can account for about 17 to 18% of costs. So to rent or not to rent will be down to individual businesses. When considering taking on rented land, lay out budgets on what you expect to achieve from that land, then whether the rental cost is sustainable. If there's a temptation to take on land many miles from the main farm, again, consider where realistic margins are achievable for rent, and remember to factor in the additional travel time, of course, and any machinery costs associated with that. Then balance that with what the rental cost would be. Is it worth it? The other element to think about is how will it taking on the outlying land affect the farming at home? Heard of a couple of examples recently from growers that had to give up some rented land they had away from their homestead, and actually subsequently found that the home farm started to perform better because focus was back on that land rather than rented land away from the homestead. So that's the big 5 cost areas which could be looked at if you're looking at reducing your total cost reduction. And of course, one of the advantages of having cost under control is a better ability to weather unexpected changes. So let's have a look at what I pulled together is what we call sort of sensitivity analysis. So what we've got here, we've got 2 sensitivity analysis. So the one on the right here is looking at net margins at a total cost of £1,172 per hectare, which is what the middle 50% performance have. And we look at using that cost to generate a net margin. We look at a yield of 5 tonnes per hectare, and we look at a price of £360 per tonne, then the resultant net margin would be £88 per hectare. If we go over to the top 25% performers, they've got a lower cost of production, so just over £100 less than the middle 50%. And if we take the same yield of 3.5 tonnes per hectare and a price of £360 per tonne, then their net margin is more like £195 per hectare. So quite a significant difference. So the advantage of having that sort of lower cost means that if you get a year where your yield is less than you'd hoped or the market price reduces, you've got that opportunity to still make a margin or at the very least reduce any potential loss as well. So what I've highlighted here are 2 areas. So the middle 50% of their cost of 1,100 per hectare. If they had, say, only 3 tonnes per hectare, and the price of £360 per tonne, they were making a negative margin of £92 per hectare. Whereas for the top 25% at that level of cost that they have, they're making a positive margin, which is not huge, not great, but at least it isn't a loss, and you'd be covering all your costs. So just to end up on what the take-home messages are really from this. Firstly, when you look at those top 25% performing farms, they don't just focus on yields. You can see the range that we had in that top 25% from 2.6 to 4.5 tonnes per hectare. And positive margins can be achieved, and even at the sort of lower yields, as you can see, generally speaking, achieving over 3 tonnes per hectare, then you can hopefully make a margin at that if your costs are under control. I think one which is probably again obvious, and Sarah will cover this in her presentation, technical side of things, but paying attention to detail in those areas of crop management that are in your control does seem to make a difference, and that's one of the reasons why the top 25% are doing what they do. Also, just to make sure that you have the optimum labour and machinery costs for the cost structure that you're aiming for. So, what level of yield you're expecting, what costs do you need associated with that, then machinery costs appropriate to that cost structure. And then finally, just investigate whether your machinery and equipment investment strategy is really working in your favour, and maybe just take a recap on what you do and how you do it, and can you somehow again get efficiency there, or make better use of what you got or what you buy in. So that's it from me for the time being. Thank you very much, and look forward to your questions later.
Mark, thank you very much for that. Right, and on to our third and final speaker, Sarah Kendall, Principal Research Scientist at ADAS. Sarah, over to you.
Thanks a lot, Martin. So it's great to be here today to update you on the latest work which is being funded by AHDB. And the work that I'm going to describe today, I think, is really testament to AHDB and the wider industry getting behind a collaborative approach to successfully growing oilseed rape in the UK. Next slide, please. So in the next 15 minutes or so, I'm going to be covering 3 main areas in my presentation. So the first is just to really briefly summarise some of the key messages that are coming out of Oilseed Yen. The second is to announce the winners of an establishment beauty contest, which we ran through Oilseed Yen this season, and also to talk about a bit of the data analysis that we've been doing. And then thirdly, I'm going to focus on an AHDB and industry-wide funded project, which is looking at reducing the impact of cabbage stem flea beetle on oilseed rape in the UK. Next slide, please. So I'm not going to go into lots of detail about the yield enhancement network, because I hope that many of you listening are familiar with it. Essentially, we set up Oilseed Yen back in 2016, and this is an industry initiative, and we're very grateful to all the sponsors for their continued support in keeping this going. And we really see the yen as an example of farm-centric research, and very much the success of this initiative has been due to the willingness of the industry and growers and agronomists to share their data, information and knowledge. And what we're trying to do through the network is improve our understanding of yield and the factors that are important, and really take that information to help growers to make improvements to yield. Next slide, please. So AHDB funded us to analyse the data that has been collected through Oilseed Yen, and this was 3 seasons worth of data, so across 2017, 18 and 19. And in total, we had 151 yields, and these actually ranged from just over 2 tonnes a hectare through to 6.84 tonnes per hectare. But you can see that the average yield was high at 4.8 tonnes. And I just want to highlight, before I go into some of the messages from this analysis, that we do a multivariate analysis. It allows us to look at associations, but it's important to point out that these aren't cause and effect. So we're looking for indications of where we can look for factors that are associated with yield. Next slide, please. So I'm just going to really briefly summarise some of the key messages that are coming out of Oilseed Yen, and really, in a way, these link in with best practice and management that we already have a good understanding about. So we estimate yield potential in the yen, and we're trying to understand the gap between the potential yield and the yields that are achieved for those particular crops in a given season. And we see that the UK yield potential is 2 to 3 times the national average. And what this means is that there is lots of scope for increasing yield. Obviously, at the moment, there are some challenges in being able to grow rape, and I think that really we need to start to get to grips with those challenges and to allow us to close this gap. We know that oilseed rape is a sink limited crop, and so what's really crucial here is trying to maximise the number of seeds per metre square, as this is the most important yield component. And so in order to achieve a high number of seeds per metre square, we need to be thinking about optimising canopy size at flowering. And I think Owen had alluded earlier to the fact that there are good looking crops this season, which is very positive, and we just need to be mindful of managing those crops carefully so that we have this optimum canopy size at flowering. Once a crop has been well set up in terms of its yield potential with a high number of seeds, it's important to then focus on maximising seed filling to meet this potential. So looking at a longer green tissue duration, especially from the leaves, to really maximise the seed filling process. And also thinking about ensuring that the soil is storing an adequate supply of water to enable this seed filling period to be maximised as well. Next slide, please. So if we just think about some of the management decisions and agronomic decisions, we know for oilseed rape that plant spacing is very important, and therefore we should be aiming to establish a plant population of 25 to 40 plants per metre square where conditions allow. This is a challenge in itself because obviously establishment at the moment isn't necessarily straightforward, but we know that oilseed rape has a really good ability to compensate against low plant populations. We're looking for large plants that set many seeds. We need to be thinking about optimising disease control and nutrition, so a focus on minimising foliar disease, and thinking about careful nitrogen timing to build that optimum canopy and then go on to maintain it. So this is about thinking about canopy management principles, but one of the things that we've seen in the yen is that we see this association for yield with a more frequent number of nitrogen applications, which potentially allows greater control. From a nutrition perspective, we see phosphorus and magnesium nutrition as being important, and we've seen associations with yield in terms of the soil P indices and also for P and magnesium in the seed as well. So we think that there's scope to use seed analysis along with soil and tissue testing to try and identify limiting nutrients and help to get the kind of nutrition strategy correct. And then finally, we need to be thinking about how we can mitigate against adverse weather. And so this is considering maximising soil water storage and rooting depth to avoid summer drought, and also thinking carefully about variety choice. So potentially looking for varieties that are less sensitive to warm conditions as well. Next slide, please. So I just want to move on to update briefly on what we're trying to do within Oilseed to make sure everything is still relevant for all growers across the UK. So please don't think that Oilseed is just for growers and agronomists who are really interested in the absolute high yields. Actually, what we want the network to reflect is we're trying to address the challenges that all growers face in the UK. And so for that reason, we introduced an establishment beauty contest with drilling date categories, and we've increased the amount of information that was captured around the establishment period, with the real hope and aim that we can use this information to not only try and understand more about yield, but actually can we try and understand more about successful establishment and what that looks like and what factors are really crucial. Next slide, please. So we set up this establishment beauty contest as part of Oilseed earlier in 2020, kind of post-establishment. And so we've had 48 crops were submitted, and you can see where they were located in the map. And we then judged these crops on the basis of plant establishment, even plant spacing, the uniformity of plant size, plant vigour, plant health, and the absence of weeds. And I'm now actually just going to go on and announce the winners for these 3 drilling day categories that we had from this establishment beauty contest. Next slide, please. So the winner of the early drilled category, which was up until the 14th of August, was Robert Fleming, who's based in the Scottish borders. And this was a crop of Aurelia, which was drilled on the 8th of August 2020. And this entry was sponsored by Limagrain. And what we found was that this crop showed excellent establishment of 87%, giving a plant population of 35 plants per metre square. And these were evenly spaced and of equal size and vigorous. If we can move on to the next slide. So now for the normal drilled category. So this was for crops drilled between the 15th and the 31st of August. And so the winner of this category was Stuart Russell, who's based in Lincolnshire. And the crop was sponsored by DSV. And this was a crop of Duke, which was drilled on the 31st of August. And again, this crop showed excellent establishment of 89% to give 51 plants per metre square. And it scored the highest marks for all 5 categories and was actually the overall winner of the 3 drilling date categories. And then finally, if we move on to the late drilled category, so this was from the 1st of September onwards, and the winner of this category was Rob Fox, who's based in Warwickshire. This entry was sponsored by AHDB. And again, it was a crop of Aurelia, which was drilled on the 1st of September. And here we saw an establishment of 88%, giving 44 plants per metre square. We saw good scores for all the categories, although this crop did perform slightly worse for the uniformity of plant size. So we're really grateful to all the farmers and agronomists that provided entries and got involved with the Establishment Beauty Contest, and want to congratulate the 3 winners, so Robert, Stuart and Rob, on their really well established crops. And I think this is, a real positive that there have been some very well established crops this season. If we move on to the next slide, please. So I just want to briefly summarise some of the data really that we've obtained through the Establishment Beauty Contest and that through what was provided. So here what we've done is compared the bottom 50% established crops to the top 50% of established crops. So for the bottom 50%, the average establishment was just 40%, through to an average establishment of 76% for the top. And in this slide, we've obviously looked at a range of different factors, and those that are shown in red show that the difference between the bottom and the top 50% was statistically significant. So we can see that the top 50% were actually on average drilled 10 days later than the bottom 50%. You can see there was obviously an increase in the number of plants that were established in these crops in line with the better establishment. What's interesting to note is that we see that the top 50% of established crops actually had narrower row widths, so 30% compared to 41%. And if we look at this, the proportion of those crops that were a hybrid variety, we did see that this was higher for the top 50% of established crops. None of this is saying that these factors are cause and effect. We're just looking for associations within the data. If we can move on to the next slide, please. We're also obviously interested in inputs, and really what this slide summarises is that we weren't able to show statistically significant differences in a range of different inputs that explained in any way the differences in establishment. So you can see here we looked at organic fertiliser applications, the nitrogen rate that was applied, as well as insecticide and molluscicide applications, and we didn't see differences. And what's also interesting to note is that the average adult cabbage stem flea beetle damage across the bottom and top 50% was identical at 4%. So that didn't seem to be looking to be associated with the establishment. Okay, if we can move on to the next slide. So I just want to acknowledge again all the Oilseed Yen sponsors for their continued support with the initiative, and we hope that we'll be able to kind of develop our understanding of thinking about yield and establishment as we build the data set and look into that in more detail. Next slide, please. So I just briefly want to just cover some of the work that's being funded by AHDB and the industry, looking at reducing the impact of cabbage stem flea beetle on oilseed rape in the UK. And so this was a project that started in August 2020, and really the aim of this work is to try and minimise the impact of cabbage stem flea beetle through an improved understanding of pest biology, on-farm control approaches and decision support. And so within the project, ADAS is collaborating with Harper Adams University, and we have two main work packages. So one is focused on research into the phenology and population biology of cabbage stem flea beetle. And I think that's really important that we're going to try and develop our understanding of these areas, and that will hopefully really aid how we use that information in terms of management. And the second work package is based on-farm trials for alternative cabbage stem flea beetle management approaches. We can move on to the next slide, please. So within work package 2, we are investigating a range of cabbage stem flea beetle management methods in a series of on-farm trials. And this is very much building on the conclusions from the previous AHDB-funded project, where this traffic light system of interventions was produced. And so what we're trying to do now is take that to the next stage and actually identify with confidence which of these methods work and in what situations, and really demonstrate that. Next slide, please. So within the project this year, so we've got 19 different trials across all the project partners which are taking place. And these are looking at a range of different management techniques. So looking at companion cropping, organic amendments, varieties, stubble length. And so what we're trying to do initially is look at these factors in isolation. So looking at one or two different combinations in a trial, And the aim is that within the third year of the project, we will bring that together and actually try to look at stacked interventions and understand how these methods can actually come together to form an IPM strategy that growers can have confidence in. Next slide, please. So I just want to include a bit of an update on one of the trials that's taking place. So this work has been funded as part of the project by BASF, and this is trying to understand the effect of sodate on cabbage stem flea beetle larvae. And so here we've got a trial that's been set up in Shropshire, where we've been looking at sowing date, variety and cultivation treatments. And so we've had a number of neighbouring fields that have been drilled on different drilling dates, and we've also got 2 varieties and also a disked or a non-disked cultivation treatment. And this has been very interesting. You can see here what the different drilling dates were, and I should highlight that actually the early drilling date isn't particularly early in terms of when oilseed rape may be drilled, so the terms are kind of comparable between them. But what we actually showed in this experiment and saw was that this mid-drilling date, when the crop was drilled on the 6th of September, that crop failed and was lost to cabbage stem flea beetle, and that field was then re-drilled, and actually the crop that was re-drilled was also lost. Whereas the early and the late drilling dates, so the 26th of August and the 15th of September, the crops established well and look okay at the moment. And the data in the graph here just highlights the impact of drilling date on the larval populations that we have measured. And so what you can see is as the drilling date has got later, the number of larvae per plant has been reduced. And so that's consistent with the work that we found in the previous AHDB project. Next slide, please. And I just quickly want to alert everyone about a new initiative that has been set up called CSFB Smart. And this is a cross-industry funded farm-based task force, which is open to all growers and agronomists. And this initiative is being led by NIAB, with many organisations across the industry involved. And the aim of this is to develop farm-based tools to help with decision making. And I just want to highlight that there's a startup meeting for this initiative next Friday, the 5th of March at 10:30. And if you would like more information about this, please visit the website where you can sign up. Next slide, please. And I just wanted to also mention that another area of AHDB funded research linked to cabbage stem flea beetle is a PhD project that's ongoing based at Harper Adams University. And this is looking at the potential of biopesticides for the control of cabbage stem flea beetle. So kind of another area of interest and potentially that may be of use in terms of how we can manage crops and beat the cabbage stem flea beetle issue. And the next slide is my final slide. Thank you.
Thank you, Sarah, very much for that. And my congratulations to Robert Fleming, Stuart Russell and Rob Fox for your success in the end competition. Well done for that. And also thank you, Sarah, for just highlighting where AHDB funding is involved in your work, because it is very important for me anyway that levy payers see where their money goes, and that's very useful. Thank you very much for that. So thank you all the speakers. Can I ask you to turn on your mics and video so we can enter the question session? Okay, so we have everybody there. Can I now ask Judith, my colleague who has been watching the questions coming in, to identify the first question? And we have about 25 minutes for questions. So the first question, please.
Yes, a lot have come through for Sarah, but I think we'll give her a rest for a bit and then one or two for Owen first. Farmers always think the price will be better tomorrow. Is it the time to fix some forward prices? That's from Andrew Cragg.
Yeah, it's a good point. I think the old crop strength of the market has really come sort of it's only February, because the prices have been rising quite steeply since Christmas. A lot of growers have sold into the rally and there's not very much left, but we have got quite a big differential between old crop prices and new crop prices. So whilst kind of 350 to 360 is available for harvest prices, and I wouldn't discourage anybody from locking in at those sort of levels for a proportion of their crop. With the UK, well, the European and the UK rapeseed price harvest, sorry, will be online before we get the American soya harvest and before the Canadian rapeseed harvest. There is potentially a window of opportunity that European rapeseed prices stay strong going into harvest if the demand that we're seeing continues. So there's nothing wrong with doing some new crop, but I wouldn't necessarily recommend doing it all because of the demand-led market that, although it's showing signs of topping out at the moment, the funds still own quite a lot of positions. And if the Chinese come in buying again, there could still be some upside, but equally there's always room for downside, and everybody's got to manage that risk as best they can. By not selling anything is probably more risky than selling something. So you're not wrong to start selling at these sort of levels.
Okay, thank you. And the next one.
Yeah, another question for Owen. What are the assumptions behind the rebound in the UK oilseed rape area shown? That's from Christopher Horn.
Yeah, that's a good point. I think those are our optimistic scenarios. But as you can see, the prices are going up, and there's been a lot of work done on the cabbage stem flea beetle. So it's a case of whilst the demand for rapeseed within the UK remains at sort of 2 million tonnes, then it seems sensible for the UK to be able to produce enough rapeseed to meet our internal demand. Okay.
Question for Mark. This is from Andrew Cragg as well. The slide showing lowest and highest, top 25%, was this the lowest and highest of the top 25%?
So that was showing so within the top 25% group performers, it was the lowest and highest of each of those variables. So it was the lowest and highest of the yields or the gross margins, etc. But it wasn't, lowest wasn't the lowest overall one individual enterprise, or the highest being the highest enterprise. It was the range within each of those variables.
Okay, question for Sarah then. This is from Peter Chapman. He thinks it's a bit of a stupid question, but it isn't. He says, our limiting factor always seems to be pod length. Plant population and pod numbers are good, but pod length too short. How can we increase pod length and subsequent seeds per metre squared?
Yeah, that's a good question, Peter, focusing in on pod length. And obviously, when we're thinking about optimizing the number of seeds per metre square, there is a limit on how many seeds per pod we actually want to achieve, and you can almost kind of overshoot the number of seeds per pod, and that won't necessarily continue to have a beneficial effect on the overall number of seeds per metre square. So I think, you know, part of this is all linked to obviously the conditions at flowering, and then when pods are setting and there onwards, and where they're good, this will obviously contribute beneficially. But I think just linking back with what I was talking about, maximising the amount of light intercepted by the crop in terms of optimising canopy size is really important, and making the most of the light available to the crop by having the optimum canopy size is really fundamental to this.
Okay, this one, it's another Andrew Craig question, but I'm going to put it in now because it does affect a lot of things that you perhaps talked about. Can you explain that you said oilseed rape is sink limited and you need to maximise seeds per metre squared? Do you really mean sow as many as possible? Next slide says 20 to 50 plants per metre squared. I'm now confused. There's an old saying that says you never get a good yield from a thick crop.
Yeah, so when we talk about the number of seeds per metre square in terms of linking to a crop being sink limited, that's really distinct from thinking about the number of seeds that are drilled. And definitely when we're thinking about optimizing plant populations and seed rates, that is very much with this view to trying to establish 25 to 40 plants per metre square. And generally speaking, with a plant population within that range, that is when you should have a good chance of maximising the number of seeds per metre square that are set. And really that's where the main yield potential comes from for oilseed rape. So clearly if a crop has set a lower number of seeds per metre square, if conditions during seed filling are very good, then those seeds should be well filled. But actually, you know, the best potential comes when a high number of seeds per metre square are set, and then these seeds are well filled. So just to really summarise, definitely in order to achieve a high number of seeds per metre square in terms of the yield component, you wouldn't be going about achieving this by drilling a very high seed rate. And actually, another interesting thing that came out of the previous AHDB funded work linking to cabbage stem flea beetle is what we showed when we looked at different seed rates is actually if you establish more plants per metre square, you don't actually reduce the number of cabbage stem flea beetle larvae that are found in those plants. So actually, as a strategy, trying to use higher seed rates against cabbage stem flea beetle can actually result in a higher larval burden on an area basis if you've got more plants and these plants all have a similar number of larvae to if the plant population had been lower. So I hope that kind of explains the distinction there.
Another one. Is sandy soil the soil of choice if you want to achieve good net margins for winter oilseed rape? That's from Stephen Hall.
Is that a question directly for me, or?
It came in when you were speaking.
I can start. I think that there isn't necessarily an answer to that, I don't think, because probably all soil types have the potential to lead to economical and profitable crops. What we obviously need is for those soils to be well managed, for there to be a good structure. And of course, in different seasons, different soil types will be preferable. And I think still though, you've got this circumstance where the weather has a kind of overbearing impact, and that soil structure is really important. But if we think about situations where heavier soils may be not detrimental but perform not as well, you know, if you've got a particularly wet winter where soils aren't well drained and therefore oilseed rape is sat in particularly wet conditions, that's clearly not going to have a beneficial effect. But then if we look at the converse, where we may have particularly dry springs and we've got light soils that don't hold on to a lot of water, there is obviously the potential for water to be limiting in those situations, and therefore in those circumstances, when you've got heavier soils that are holding on to more water and more water is available, then that will be beneficial.
Also then, another one for Sarah. When was the larvae count done on the sowing date larvae trial? That's from Mark Topliff.
Yeah, so I think I'm right in saying that this was done back in February. So probably the end of January to early February is the time point that was done. And I mean, at the moment we're doing a lot of larval assessments in oilseed rape crops around the country, and non-surprisingly what we've seen is a big range in the larval populations in crops. And obviously kind of as we move into March, now is a really good time to go and have a look in your crops and see how many larvae are in them, and so you've got that understanding.
Question for you, Sarah, again from Clive Innes this time. How important is row spacing for oilseed rape? What is optimum?
Yeah, so in the past, ADAS has done a lot of work trying to understand and kind of optimise our advice from a plant population and a row spacing perspective. And I think we've looked at row spacing up to 75 centimetres. And really what we've seen is that once you start to increase row spacing above 50 centimetres, there is the chance that this starts to have a negative impact on yield, because what you essentially have then is plants that are really bunched up down the row with then lots of horizontal space. And you'll have seen with the data that I presented, whereby we looked at the bottom and the top 50% of established crops, actually one of the things coming out there was that the higher establishment seemed to be associated with a narrower row spacing of 30 centimetres compared to 41 centimetres. And I think really this, in a way, it does make sense, because if we think about the kind of plant architecture and the crop that we're trying to develop, ideally we want to try and maximise the number of branches per plant. And I explained earlier that we're looking for these big plants that are able to set many seeds. And so I think if you've got a lot of plants that are very close down a row, there's the potential that actually there's a limit in terms of light interception by the crop and the capacity for branching. So I think there is potential that row spacing can be too wide, and growers should be thinking about that. Obviously it has to fit in with what kit you've got available and the system that you're using as well.
Shall we give Sarah a rest for a bit? And question for Owen. This is from Amanda Farrow. What is the basis for the projection of area increase for harvest 22 and 23?
Okay, so I think the whole theory about it is that if we can get to the area that we were looking for 2023, which I think was about 540 odd thousand hectares, that puts the UK supply and demand back into balance. So, whilst that might well be an optimistic scenario, I think from the point of view of the demand, then that would be an ideal scenario for us to look at.
Okay, and I think the next one here is for Mark. Do you have a breakdown of overheads for the two farms compared? I've lost who asked that. Sorry.
Yep. Yes, we do have. I've tried to anonymise it a bit, so I don't want to sort of share too much information, but we would have a breakdown of that. But generally, the the sort of breakdown is very similar between the two farms, apart from the fact that the contracting operations on Farm B obviously was more heavily weighted in terms of that cost compared to Farm A, which did its own cultivations. But if you looked at the machinery costs on its own, its labour costs and property costs, they're similar between the two. Hence why the overall overheads were almost exactly the same.
Okay, this is another one for Owen. It's quite a long question and it's got 2 or 3 bits in it. Are you ready?
Yep, fire away.
What are your recommendations for marketing oilseed rape over the next 2 years? More bullish points than bearish, suggesting prices, although relatively high, should go higher. If so, are you suggesting that nobody sells anything until they absolutely need to for cash or space reasons? And how can a farmer use hedging tools with his market strategy in case the market has peaked or falls during the next 2 years?
Okay, right. So starting with the first idea. So what is the recommendation for marketing oilseed rape over the next 2 years? So yeah, I think as I alluded to earlier on, with rapeseed prices at £350 to £360 a tonne for harvest, it cannot be wrong to start marketing at those sort of levels. And yeah, if you've got harvest movement, then you should be maybe looking at doing a proportion of your crop, because you're never going to hit the top of the market if you need to sort of sell into the rise. And if it does rise, then you can continue your exposure and keep selling. If for whatever reason we are at the top of the market, which is possible because the market is never as bullish as when it's at the top, so it could well start going down from now on. I haven't got a crystal ball to look into on that one, and we've seen over the current week, we've seen signs of the canola market getting very much overheated. You know, it's probably fallen $100 in a week. And that's a very big move. It got moved technically to the upside very high, but we've also seen a big drop to the downside. So we were getting excited about European prices going up because we were actually at a discount to Canadian. The Canadian and the European prices are now more similar, and whilst that occurs, then perhaps the European should be a premium to the Canadian. We suddenly start going into through the spring now, and the Canadian farmer thinks he's going to plant more canola, then the dynamics change, and the dynamics also change on the soya and corn acres, and what the weather's going to be like when they start planting those. So there's a lot of water to go under the bridge between now and harvest. Whilst there is potential for the upside, there's also potential for downside, and we can be quietly bullish, but it means that you shouldn't be waiting for the top that may have already been and gone. And for growing rapeseed at over £350 a tonne, if you get a decent yield, you're going to get a decent gross margin, and it's sensible to lock into those as part of your risk profile. So the next point was, am I more bullish and bearish? I am, because of the of how the harvests are going to fall. The European harvest is going to come before the Canadian and the US soya harvest, so there is potentially a window of opportunity for us. But having said that, you probably need to be starting to make sales to sell into the rally. And the next point was about hedging tools. It's very difficult to sort of look at kind of what would be the best way to do. There's people offering various things. You can use Matif to hedge, but then you've got currency risk. From a United Oilseeds point of view, we recommend that farmers go into our pools. We run a harvest pool, a long pool, and a carte blanche pool. They might not necessarily hit the top of the market, but we're looking to sell, and we've got at various times, and we've got the market information to make those sales when we consider the correct timings are. But you can always go back to the old adage of do a third, and a third. So you sell a third before harvest, said a third when you think the prices are right, and then maybe a third towards the end of the season to take care of any rallies. So there are various hedging tools that you can use, and each farmer has need to find out his own best way of sorting it so that it suits his own cash flow, so it suits his own storage requirements, and we're more than happy at United Oilseeds to help with that process. Okay.
Okay, and I think at this point back to Sarah. You've still got a lot left, Sarah, quite a few. Can you comment, please? Question from Richard Butler. Can you comment more on the effect of companion crops on establishment?
Well, I wish I could kind of comment more, because really the work that we're doing at ADAS has only really begun, I suppose, in the new AHDB funded project. So we have looked at things on the odd occasion in the past, but actually this is a focus of the project going forward. And clearly, you know, across the industry, people are talking about the benefits that companion cropping can bring to establishing a crop, and within the project, we're looking at a range of different companion crops and trying to understand the benefits that they bring. Within some of the trials that we looked at this year, we looked at companion cropping with berseem clover. But one of the challenges is that you sometimes set up these experiments, and then unfortunately you don't necessarily get the cabbage stem flea beetle pressure that you would have liked to really try and test something. So in some of the companion crop trials, the pressure was very low, and we didn't see any significant difference in terms of cabbage stem flea beetle damage or plant population with and without the berseem clover. But as I said, that was in a low pressure situation. So, you know, we're definitely we're looking forward to, I suppose, really getting to grips with the companion cropping and what it can bring to aiding establishment from a flea beetle perspective. And I think the important thing is understanding the companion crop that you're interested in looking at, and what the role of that companion crop is going to be. So are you trying to kind of deter flea beetle? Are you using the companion crop for a sacrificial purpose, so the flea beetle will be drawn to that particular plant as opposed to the oilseed rape? But yeah, as I mentioned, kind of anecdotally, many farmers are talking about the benefits. So we just hope that we can kind of bring this together within the project, really.
Do we have time for one or two more questions, Martin?
I think we've got one more if we could.
Okay, again for you, Sarah, from George Hosford. No mention of work done on defoliation projects on oilseed rape. Larval numbers can be reduced. How much yield should we be prepared to risk by doing this?
Yeah, thanks for your question, George. We worked with George actually on a trial. It was an AHDB Innovative Farmers Field Lab looking at the potential for using defoliation to reduce larval numbers in oilseed rape. And that wasn't the first time we'd looked at defoliation as a method. So we've had work back to the late 90s that we'd done over in Herefordshire looking at defoliation. And so really, I think what we have to say is that defoliation pre-stem extension can be highly successful in reducing the number of larvae in the plant. So we've seen that in multiple experiments. We've also seen that you can actually even increase yield if you've got a very forward crop by defoliating. There is potential for that. But the converse to this is that there is also a risk of significantly reducing yield if you get the conditions or the timing of defoliation wrong, or if the spring is particularly dry and it doesn't allow the crop to compensate well. So I think that defoliation potentially does fit in as a management strategy against larvae, but it probably fits in certain circumstances where crops are very forward. And I think growers need to think carefully about, things like how resilient is their rape normally, and do they see good compensation in their crops, and what has happened in the past when the spring may be very dry, because there is risk. And I think really, to answer your question, George, I think you need to be understanding kind of at what point is your yield economical or not, and therefore how much yield could you be willing to lose if this doesn't work out. So it's a risky management technique, but I think if people can get it right, it could be useful.
Okay, thank you very much indeed for answering those questions. Just to say that we will quickly go through after this all the questions we received, and any that we didn't answer, we will provide an answer to. And I would say to anybody who's asked questions or not, if you want to contact the individual speakers directly, do by all means. I'm sure they'd be very happy to follow up on any of these points. So let me thank all the speakers. Thank you all for your excellent contributions. Can I ask everybody who has been attending, if you would, to complete the feedback form? It's very important for us to improve these where we can. The video of the conference will be sent to you within the next 24 hours, and the slides will be made available online. Can I just also refer you back to AHDB's website? We have a lot of information on the website about oilseed rape production. In particular, my colleague Charlotte Rowley has done a lot of work pulling together information on cabbage stem flea beetle, and she has nicely summarized it on the website with the links to the greater detail for those that you wanted. So please do use that facility. That information is there for you. And finally, just to say, we strongly believe in the future of oilseed rape. As I said at the beginning, AHDB is very committed to doing all we can to ensure that it remains a profitable and sustainable crop. So this is part of our work. We will keep putting the information out to you in many different forms, so look out for it if you would. And that's all I'm going to say. I'm going to close the conference now, so thank you very much for joining us. Thank you indeed. Goodbye.